Hello and welcome back to your South King County real estate update. My name's Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway, and I am back with your local news for the month. Go ahead and jump right on into these slides and get going for the first update of the year. So it is, I forgot to change the year. There's always one thing I forget to change on this. January 2025. So first, Happy New Year. And we'll get going with the first update of the year. Upcoming classes, I have one on January 30th. This is actually a new class that we put together, and it is designed for people who want to move, own their home currently, and would like to use the equity in their current home to purchase their next one. So if that is you, please sign up for this class, or if you know someone who might be interested. It's a really great opportunity. Like I said, it's a brand new class, and I am super excited about this one on January 30th. And also another brand new class, Investor's Toolkit, a beginner's guide to real estate investing success. And this will be on February 7th. These are both webinars, so you can be comfy at home in your pajamas, having some dinner, and just listen along, get all of your questions answered. So if you're looking to use your equity in your current home to move to the next one, or if you are interested in getting started in real estate investing, please sign up for these classes. They're totally free. And this Investor's Toolkit, we actually have 3 people helping present. So we'll have a mortgage broker, myself as the real estate agent, and a property manager. So you'll get all of your questions answered from 3 different perspectives. Really looking forward to this one. And I do have my winter buyer and seller guides available. And there's also a first-time home buyer guide. So if you would like one of these, I can send this over to you, either print it out and send it over a hard copy, or meet up with you somewhere and get you a hard copy, or I can just email it to you, quick PDF email. So let me know if you would like one of these, and I will get it on over to you. And into the news. Seattle area housing market sluggish and pricey amid deal season. The Seattle area housing market ended 2024 on a sleepy note as costs remained high and home shoppers focused on the holidays. So this is not really a surprise. It's kind of what we expect to see this time of year. December is usually the slowest month for real estate transactions. But if we compare it to a year ago, prices did continue to climb compared to a year earlier, but dropped from November. Mortgage rates have stayed just below 7% for December. That's been reeling back the market. We did have a dip back in September. September and October were a little bit busier than we would expect to be this time of year, but those rates went up and really put a damper on the number of transactions that we're having. But we are really starting to see people get used to these higher rates, people that have been waiting to move. They don't want to give up their low interest rate, but they want to move. Life is taking over, and a lot more people are choosing to move. They're getting attuned to the idea of, okay, we're not going to see those rates get to 5% anytime soon. How much longer do I forego making the transaction that I want to make? So if we look at those prices, King County is pretty much flat from last year. Snohomish did go up. And for sales volume, we were down 20% from November across the region, but up in some areas from a year ago. It really is super area specific. They climbed 7% year over year in King County, but fell 10% in Snohomish County. So you can see there's a huge disparity there from one area to another. But no surprise here, December wasn't a big month for listing homes for sale. Fewer homes hit the market in December than any other month, and that is exactly what we would expect to see. Even though the market is slow, some people can't avoid buying or selling because of job changes or other factors. While many sellers take their homes off the market during the slow winter months and relist in the spring, those with homes still available may be willing to negotiate, and buyers might be expecting a steal. We always call December the deal season. People who are shopping want a discount. Home and condo sales in King County. For home sales, Seattle was way stronger this year than last year. East Side, not so much. They have come back on the number of home sales from a year ago. In condo sales, Seattle and the East Side both outpaced where they were last year on the number of condo sales. For Southwest King and Southeast King, it's exactly even. For home sales in Southwest and Southeast King, there were more transactions this year than last December. For median home prices, we did go up in all areas for single family homes except for Southwest King, which is just ever so slightly less than it was a year ago. Condo sales, Seattle has dipped a bit, but the other areas are outpacing where they were last year. And that brings us to our hyperlocal breakdown. For Kent, Renton, Auburn, and Federal Way, new listings coming to the market. You can see this huge drop off the past couple of months. We had very few homes come to the market in December. But compared to a year ago, we are up in Renton, Auburn, and Federal Way, up 95.7% from a year ago, and Kent did drop ever so slightly. For pending sales, we're up in all areas from 1 year ago in December, and median days on market, Kent is up 100% from where they were a year ago, so twice as long homes are sitting on the market in Kent than they were 1 year ago. Renton and Auburn are both up from where they were a year ago. Federal Way actually down. Federal Way had a bit of an uptick on the days on market in December. We had upticks in all areas, but they dropped down in November and then back up. For median sales price, we are up 12% year over year in Kent, 13 in Renton, 7 in Auburn, and again, pretty flat in Federal Way. For mortgage rates last month, when we had our monthly update, we were at 6.95 for the daily rate and 6.6 for our weekly average rate. If we bring it to this week, our weekly average is 6.93 for the fourth straight increase. It didn't increase much over the week, 6.91 to 6.93. Interest rates have been climbing since the Federal Reserve signaled last month that it expects to raise its bench rate mark just twice this year, down from the 4 cuts it originally forecasted in September. And the Fed is tapping the brakes on rate cuts because inflation remains stubbornly above the central bank's 2% target, even though it's fallen from its mid-22 peak. Economists also worry that Trump's economic policies, notably his plan to vastly increase tariffs on imports, could fuel inflation, which would be bad news for interest rates. And 30-year fixed for our daily rate is at 7.24. So our weekly average this week is 6.93. Our daily is 7.24. So what happened this week? Because our weekly average is kind of a Monday, Tuesday to Monday, Tuesday comparison. And so here on Friday, we're at 7.24. You can see the huge run up here from December. We were 6.6, 6.7-ish, and then we just had this big run up since then. And that was about when the Fed met. But what's happening? Mortgage rates jumped sharply after job report. So there was a job report that came out today that was significantly stronger than they had anticipated. So that really made rates kind of skyrocket today. And then from here, the pain can continue if this week's data sings a similar tune. While it's not as consistent a market mover as the jobs report, Wednesday's consumer price index is the only other economic report that's in the same league. So we got our jobs report today. And then next week, we get our consumer price index report, which will tell us how our inflation numbers are coming. High inflation is the enemy of mortgage rates. So if this number is high, then interest rates will go up. And then if the number comes out lower than anticipated, they may go down. Rates were abnormally low for the better part of 15 years, and they've been abnormally high for the last 2. They're coming down, but where they'll settle is going to be a level that's higher than what we had seen before 2022. And that's from Greg McBride, the chief financial analyst at Bankrate. Looking forward for mortgage rate projections, you can see where we've been in 2022 when things started to really go up, and we've been hanging up here around the 6.5 to 7% range and expecting to trail down ever so slightly into the 6 to 6.5% range. If we're looking at a few more predictions, you can see this is pretty much across the board. It's all right around that 6.5%, varying a little bit either way. But the average of all of these is 6.36. But just to keep this in perspective, if we look at mortgage rates, the average mortgage rate per decade in the 1970s, it was 8.86. The 80s was 12.7%. 90s dropped back down to 8.12. And then since the 2000s, we've been under this average rate. If you go back and take all of these numbers, we dropped below our current rate is, when this slide was produced, was 6.91. We now know that we are closer to that 7% mark now, just a little bit over 7. 6.27 in the 2000s and 4.09 in the 2010s. So it depends on your perspective and how historically we're looking, but rates are a lot higher than they've been for the past 20 years. Mortgage rates have averaged above 6% for the past 24 months. Buyers are no longer waiting for or expecting mortgage rates to fall substantially. Furthermore, buyers are in a better position to negotiate as the market shifts away from a seller's market. And that's from Lawrence Hume, the chief economist at National Association of Realtors. For home price forecasts, we are all over the board here, but the average of all of these entities is 2.9% home price appreciation throughout 2025. So where we ended the year on December 31st, 2024 to December 31st, 2025, these are the projections for how much these entities think that home prices will increase. And again, tapping back into this class, don't forget to register for the equity moving class, and that's on January 30th, or the Investor's Toolkit, a beginner's guide to real estate investing success. That's on February 7th. And those buyer and seller guides and the first time home buyer guide, if you would like one of these, please let me know. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area that you're interested in potentially moving to. Just reach out and we will find some time to chat. So thank you so much for joining me for your South King County real estate update. Happy New Year again. I hope 2025 treats you very well, and love to have a conversation with you about the real estate market in the future. So please reach out. If you have any questions, just let me know. Happy New Year. Have a great month.